Good morning, students. Welcome to the second session of your project appraisal. So, in this session, we are going to study about the types of lease. So, actually, in the previous classes, already we have discussed. Previous session, we have already discussed about what is lease and how the companies will be going through the lease or buy decisions. So, here, what is lease? Lease is a contract between the lessor and lessee to use the asset. So in this session we are going to study about how many types of lease are there and what are its major differences. Actually there are two major types of lease are there, finance lease and operating lease. So the major difference between the finance lease and operating lease is under the finance lease the risk and rewards of the ownership of the assets are enjoyed by the lessee. So who is lessee? Lessee means actually the company which has taken the asset on lease. So here, if you are having a contract of finance lease between the lessor and lessee, then the ownership, rewards, and risk will be borne by the person who is using the asset, not the owner, but the company will be the responsible for the risk and also enjoying the returns. Coming to the operating lease, it is just a rental agreement. Means the ownership, the risk and reward will be totally in the hands of the lessor, not the lessee. The next is legal title of the assets remains with the lessor. Though the risk and rewards are enjoyed by the lessee, but still the asset will be in the name of the owner. Owner means the lessor, not the company. It will be with the financier only. The next coming to the leasing agreement. So here if you take under financial lease, if you take one agreement, that is for example if you want to use one machine, then that machine's economic life, whole economic life will be continued for only one agreement. If one agreement is made, that is enough for the use of that asset for the entire life of the asset. Whereas here, because operating means it is continuous, short term. So several leases are expected to use the leased asset during the useful life. So if you take once the lease agreement has been entered, that same lease agreement will be used for the several lessees. The next is lessee is responsible for the maintenance and similar regular cost. So if any maintenance has come to the machine, if any repairs has come, if any overhauling has to be done, so all these expenses are borne by the lessee here. Under the lease agreement, financial lease, it cannot be cancelled. Once you enter into the lease agreement under the financial lease, it will not be cancelled. It has to be incurred. If you want to cancel it, then many type of penalties you have to pay. Means money, you have to pay fines like that. Then lessee period is much shorter, as I already told you. Here the financial lease period is long term. It will be for the whole lifetime, whereas here it will be for the shorter lifetime. The maintenance and similar cost will be met by whom? Lessor. Here we have studied the maintenance and similar cost will be maintained by the lessee, whereas here it will be lessor, the owner, the financier. Then financial lease do affect on assets and liabilities in the balance sheet of the lessee. So if you are a company who took the asset on lease, then in your balance sheet you can show it as a financial lease. Means you can show it as a liability side of the balance sheet that I have taken financial loan or financial lease loan, and on the asset side you can show it as a machine. Whereas operating lease, because it is related to operations, it will not be a long term, so it cannot be shown in the balance sheet. So this is the major difference between the financial lease and operating lease. So already advantages and disadvantages all we have finished in our previous session. So by this your session 2 is over. All the best. See you in the next session.